So as we begin the last couple of sessions on our summit today, I hope the conversations you've heard so far have gotten everyone thinking about communities, specifically community outreach, development, and resilience. Also about credit union values, specifically collaboration for the greater good and inclusivity. These are just some of the themes that have jumped out at me. And how our values serve as a differentiator in the market for financial services. So with these and many other topics we've covered as the backdrop, I'm excited now to turn things over to my colleague, Sofia Villarreal, to introduce a truly illustrious panel of experts who I expect will be able to go deep on these and other topics as well as broaden our scope with some new perspectives. Sofia, whom many of you met yesterday at our advanced track sessions, is the program manager of the United in Sustainability program at UNFCU. I'm not sure that does justice to her expertise. Sofia is a true subject matter expert. I would go so far as to say this is UNFCU's resident sustainability guru. So, Sofia, over to you.
Muchas gracias a todos. Espero que hayan disfrutado bastante de su lunch. Esta sesión va a ser en español. No sé si les habían comentado. Claro. Non, mais vraiment, il va être en français, en fait. J'espère que tout le monde est super content aujourd'hui. Not really. But I kind of want to just say, excuse if I say any names wrong, because English is not my first language. So just give me some grace with that. But I'm really happy we're here to have this great discussion with subject matter experts. After all the content we've been presented, I really hope we're able to wrap up and merge this topic of DEI with climate change. We are at the UN, after all, so I'm very honored to be here. I'm so happy to be collaborating with credit unions that really try to make a mark in the world. And I would really want us to think about this panel as the action panel. Let's not just think about ideas. Let's just bring it forward and take something from this. If you like a commentary, I would really like you to go with the panelists, ask for the email, make that connection, take it further. It's just not a conversation that stays here. Let's go and change the world. So with that said, welcome everyone to our panel on latest trends and development in climate risk mitigation, adaptation, and social impact. Thank you for being here. So let's get started. I'm honored to welcome this panel of experts, as I said, but I like to call them the dream team. So here we go. Cathie Mahon, CEO at Inclusiv. Damaris Carroll. Sorry, I'm not going to know that. Andrea Harris, here is VP of Impact Strategy from Vancity. Badeel Janjua, America's Sustainability Head of Financial Institutions at S&P Global Market Intelligence. Damaris Carroll, Lead DEI and Employee Experience Partner from Velera. And Charlotte Ewer, Community Engagement Specialist from East Coast Credit Union. Welcome to you all, and thank you for being and taking the time to be in person, which is a big deal nowadays. Besides, being passionate about climate risk, I really want to say that the real reason for me to be here is really linking all countries and nationalities. I'm actually Mexican, so for me, it's not only about the financial sector, but it's really how can we help the most disadvantaged people and also the next generations. So let's get started. I don't want to take too long in introductions, but I would like you to tell me a little bit about yourselves, and could you share how your role contributes to climate risk management and social impact within your organization? And we'll start here with Cathie.
Thank you, Sofia, and thank you so much to UNFCU and United in Sustainability for inviting me onto this incredible panel. So Cathie Mahon, I am the president and CEO at Inclusiv, and I'll just say, as a result of being the CEO, I'm kind of the principal driver of the climate conversation, and then I have an amazing team who actually does all the work and manages and and creates the strategy and has really been driving an incredible amount of the work. But what I will say is sort of from my vantage point, over the years, Inclusiv, we are a national network of community development credit unions. So those are credit unions that are sort of deep in community with a real focus on promoting financial inclusion and equity. And so over the years, the climate risks to the credit unions have been one thing, but more importantly, what our credit union members have been increasingly finding is the ability for their communities to be resilient is increasingly negatively impacted as climate crises intensify and become more frequent, and the ability for their communities to be rebounding is particularly challenging. And that has really driven for us the kind of imperative to help us kind of organize a whole series of strategies around resilience, adaptation, mitigation, but also climate solutions. So.
Thank you. There we go. Great to be here today. Thank you for having me. I'm the VP of Impact Strategy with Vancity Credit Union, another Canadian credit union. I think we had a lot of Canadian presence this summit, so delighted to see that. We are on the west coast of Canada, and then we also have a bank charter, so we have a subsidiary bank that serves across Canada. We've been around for a while and with a deep commitment to sustainability. More recently, in the last 5 years, a deeper commitment around climate, but really working from that legacy of financial inclusion, which is the cornerstone of why we exist, and trying to merge issues around climate adaptation with building financial resilience and supporting access to financial services to support those people who will be hit hardest by the weather events that are already occurring in our community, through providing special products, providing accessible services, thinking through housing. How can we're facing affordable housing crisis, so how can we create solutions? And a lot of that we do in partnership with other organizations. Like Cathie, my role is more of at the strategy level, and I have a really wonderful team that helps to identify partners in the community, identify best practices, trends, standards to sign up on, following what's going on. But more and more, I would say our role has shifted to one of being delivery, to really working in partnership with our lines of business to embed sustainability in their roles and everyday accountabilities. And that's a really exciting phase for us to be going through, because I can see that that will create greater impact at scale in a way that we haven't in the past. Thank you, Badeel.
Yeah, thank you so much for having me here. And I think Andrea's intro kind of segues perfectly into mine. So, S&P Global is a pretty large financial institution providing a lot of different solutions. And while we have an in-house team that's focused around our own sustainability goals, putting out our disclosures, TCFD, we are a UNPRI signatory. I work adjacent with that team. That team is, obviously doing more of our own internal analysis, making plans of how we can have positive impact. So in my personal role, I had our financial institution sales team that is working directly with, many of your peers. So it's financial institutions from asset owners, investment managers, banks, private equity firms, and obviously, community banks and credit unions are part of that. And really, the work is divided between climate risk assessment, disclosure, as well as helping the clients, look into positive impact. So it really starts from the point of you need to know where you are today, and you need to know what your current footprint is before you can make actual impact and change. So a lot of our work is around, helping clients understand what their current footprint is in terms of emissions, in terms of the potential risk. Credit unions inherently by nature, I think their ESG and sustainability is part of their charter, given the community focus they have. However, that also means that they have very, very concentrated risk given they're operating in one geography, and like we were talking about some of the climate resilience and adaptation challenges, the risks are, I think, even more profound. So there's that side of the coin. We'll talk a little bit more about it later in the panel. And then there's obviously the impact part where, while it's not all doom and gloom, there's a lot that financial institutions can do, including credit unions, in having a positive impact through a lot of creative green products and green lending, et cetera. So looking forward to the discussion today. So thank you.
Hello, everyone. Thank you for having me today. My name is Damaris Carroll, and I am the DEI and Employee Experience Manager, Program Lead with Velera. Part of my responsibility internally and externally is really around 4 strategic purposes and focus around our talent, our culture, our industry, and community. So we do help our credit unions really look through the sustainability with the underrepresented talent segments in mind. So part of my job at the organization is really bringing to the forefront to our board as well as our executive really what's going on, the data pieces to it, the financial pieces of really investing in these communities where climate change makes impact, and also what products and services are we offering our credit unions that we support in order for them to be able to provide to their members some sustainability products and services that really speak to their community. And then looking at trends and opportunities in the forward movement when we look at our young segment, bringing into our industry, our digital footprint, as well as what can we look to advance in the future when we look at technology, AI, innovation. I've said to you, because we talked about that earlier, and really bringing a new wave of looking through climate change through a different lens and simplifying these processes and language for our community members to really take charge and accountability for their communities through our credit unions.
Hello, everyone. Thank you so much for offering us this spot on the panel. My name is Charlotte Jewer, and I'm the Community Engagement Specialist at East Coast Credit Union. We are located throughout Nova Scotia, and we have about 20 branches, currently a virtual branch, but we're moving into more of the ESG space. We've been around for 90 years now, so a very old credit union, very proud of that, and have always been doing a lot of work in social impact and governance, but really trying to incorporate more of our environmental focus into our current programs and products.
Thank you, everyone. No, that was a great introduction, and I love the link with climate change and social impact. So just to get it out of the way, I would like to jump into integrating climate mitigation and adaptation. So we cannot speak about financial institution without mentioning how it affects, how climate change provides impacts and how it affects itself, pretty much. So I would like us to touch on transition risk and physical risk. So transition risk, as you probably know, are the ones that arise from a shift to a low carbon economy, from regulations, technology, market changes, and how a company is exposed now to these new sustainable practices to adapt to climate change. And physical risk, pretty much easier to understand extreme events or long-term shifts in climate patterns, how that can disrupt operations, infrastructure, and provide, unfortunately, significant losses. So having said that, and here's the expert, so Badeel, I'll leave it to you, but I would like to know from S&P Global, what trends are emerging in how transition risk and physical risk affect corporations and financial institutions, and what implications are for credit unions? And I think we have some slides too.
Yes, absolutely. I think it'd be great perhaps to start with the slides, and let's see, it might be a different one. So if you move forward, that's fine. Yep, perfect. So, and we can cover, if you want to cover green lending, we can definitely talk about some of those ideas, because that is quite relevant, and that's more of a practical application. So yeah, just highlighting, just to put a little bit of landscape out there. So transition risk, as Sofia alluded, is really the risk, and it's also the opportunity that institutions and corporations and small businesses face as they are adapting to a changing climate. There's different aspects to this, such as carbon pricing, potential carbon taxes. There's also stranded assets in the case where, you have made a loan to a small business that is in a sector that may dramatically shift due to technology changes, due to, just that particular technology getting phased out. So that is just something that I think financial institutions are more and more prone to. Obviously, on the larger end of the financial spectrum, the larger banks and larger investment managers, asset owners are already factoring this in, and they're looking into it. This is an interesting slide. I just have 2 slides to cover today, but the first one is just highlighting, what the government involvement. So there's a few different, bars on this chart, but what it shows is that how much carbon pricing and carbon policy incorporation has evolved year over year from 2015 to 2021. So what we see is that by 2021, about 70% of commitments around carbon taxes and carbon pricings are coming from the governments themselves. So what we are seeing is that from the top, while U.S. is an interesting story with currently the SEC, there's a SEC bill that currently has a stay. California looks like it's moving forward with some version of a emissions bill, and then there's something in the New York Senate as well. So we are seeing progress. If you look up north in Canada, it's a totally different story that perhaps I'll talk about later in the panel. But we are seeing more and more push from the government policy side, but we're also seeing financial institutions voluntarily understand where the risks are. If you are going to, like I used that lending example, if you are going to lend to someone and there's an inherent risk in the industry they operate, I think it's a service to that individual, that business, as well as yourself, to bake that analysis into your lending and underwriting process. If you just move forward to the next slide, please. This is, again, not to be all doom and gloom. What we have here, it's a little small, but we can share these slides with you afterwards. But what it shows is from 2020, there's 2 different versions of time horizons. One's looking at 2020 and one at 2050. And the view we have on the left-hand side is that of Florida, Miami in particular. And we're seeing how essentially within 30 years, what areas would be flood prone. And the dark blue you see is a lot of area that will potentially be underwater. And this is under a moderate scenario of climate change, just like we're looking at a moderate increase of temperature. And then on the right-hand side, we are looking at different regions of U.S. and Americas in general. So at the very bottom, we have Alaska, and then we have Pacific Northwest, and the dark blue shows 2020 versus the risk in 2050. So within 30 years, and Gulf at the top is very high, and Florida is number 2. So, if you have, again, talking from the credit union business model, if you are operating in a certain geolocation, you may have some very specific climate risks that are unique to your region. It could be, obviously, flooding is a common one, but it could be wildfires, drought, water stress. So what we are seeing in terms of trends is that with many of the, some of your peers I work with, a lot of banks I work with, I would say quite candidly, the financial institutions, some of the banks, and are a little bit more ahead of credit unions. But there are several credit unions that we do work with that are starting to understand, at least at a very bare starting point, understand what are the concentrated risks they have in the areas they operate. Once you know what the risks are, then you can try to have a certain adaptation or a certain plan to move forward. So that could involve informing your community and the members about the potential risks. You can again offer sustainable products. You can offer incentives around solutions that have adaptation measures, and there's different unique there's a lot of research and a lot of novel ideas that I look forward to hearing from some of the other panelists around how they're creating impact and change. But that's just just to set the scene and highlight what institutions are doing. So we are seeing a lot of institutions starting to bake, just to summarize, physical climate risk change as well as transition risk into their internal analysis, and then they're trying to apply downstream into the products they offer in the market. So thank you.
And linked to that, but from a different perspective, we've heard a lot from Inclusiv about products and grants. So I would like to pretty much, where's the gap of information between what are the offerings and the most affected people? So as you might know, well, actually, we'll show it in a bit, but unfortunately, the disadvantaged and the poorest are the ones more affected to climate change. So, Cathie, could you provide some examples in topics such as finance, innovative services, incentives, financial inclusion, how we can link all the products that you mentioned, not only you, but Annetta and your colleagues from Inclusiv, with the need to pretty much counter risk, physical risk, and transition risk, just mentioned by Badeel.
Yeah, absolutely. And I think it'll come from a little bit of a different perspective. And I appreciate this perspective about the institutional risk around climate change. When we think a lot about the community risk, and we think about credit unions or the institution as the vehicle for mitigating the risk to the community. And so I'll give one quick example and then maybe draw some additional conclusions there. In 2017, after Hurricanes Maria and Irma decimated the island of Puerto Rico, there are over 100 cooperativas de ahorro y crédito in Puerto Rico, which are savings and loan co-ops or credit unions. They're in almost every community across the island. And in the aftermath of, particularly of Maria, when the electric grid went down, and in most of the island stayed down for many months, in some parts of the island as much as 8 months later, there still was no power, you had a circumstance in which communities were kind of would have been left completely on their own were it not for the on-the-ground institutions that were the cooperativas. The bank, within 24 to 48 hours, every cooperativa on the island of Puerto Rico was open. They were handing out cash. They were taking, in a manual way, information on the borrowers. They were at night going up to a generator in San Juan, making their way there, getting more cash, entering information into their systems, and opening up the next day to provide basic access to capital in what would have otherwise been hundreds of underserved communities. And so it's a space in which the banks, by the way, did not reopen for months. In many cases, you had people who were then being vouched for by their neighbors or family members to become credit union members because they were bank customers and couldn't get access to their money because there was no ATM networks, no electronic transactions were possible. So for us, when we think about the risks, we do really want to think about what is our power. Our power is we are on-the-ground institutions, and we are there oftentimes with staff and board members and volunteers who are in the communities who, address the issues of their own homes, their neighbors' homes, their own families, and then they walk down to the credit union or get themselves down to the credit union so they can help their members. And so that's a really important, I think, space. And one of the things I think when we think about climate risk conversations, and particularly with regulators, is, there's a tendency when a climate event occurs for regulators to say, like, uh-oh, there's going to be a problem here, pull back. Don't lend, don't make the losses worse, don't do anything, just pull back. And one of the things that we have found repeatedly from community development credit unions is when they lean in those moments, they get cash out, they make loans that could be problematic, but if they don't, they have an entire portfolio of loans that will go bad. So they have to lean into those moments. And so we really want to encourage a framework around climate risk to be looking at things at the systemic level, so there can be capital that enables the on-the-ground institutions to be responding to immediate community risks immediately, so that we can be supporting kind of them to remain viable institutions moving forward. So love to talk more about that.
Thank you. And I believe the next slides are really going to help show a bit. Yes, so here you could see the energy burden among extremely low-income households. So the darker you go, it's more than 20% of average energy burden in comparison to others. So you can see in the south, there's definitely a higher burden. And if you go to the next slide, that's not okay. well, we find out what happened with the slide. There's also a high correlation of people of color and the energy burden that they have. So in general, in the South of the United States, pretty much where there's more concentration of people of color, there's more concentration of energy burden. In the map, it would look great, but we'll figure it out. But in the meantime, just if you trust me that it was going to be there, having said that, I know Vancity has this commitment, which is very interesting regarding equity. So Vancity's vision, I wouldn't say commitment, vision, sorry, is a transform economy that protects the earth and guarantees equity for all. So I wanted to ask you, Andrea, how are you able to provide that equity given in the case of the U.S., there's like a high correlation of you can see the darker color there. It's in the little chart below, you can see the percentage of people of color, and then on the other axis, you can see the burden of households. So it's very illustrative that where climate change is going to hit the most, as in the next graph is the extreme heat days, people are going to need to use more energy. So it's a bit unfair, let's say that, right? So having said that, Andrea, if you can share a little bit of how have you been able to provide in an equal way financial services or anything related to something similar, I guess, in Canada, because this is in the U.S.
Sorry, Sofia. So climate related. We offer a suite of products that are like green lending to support our clients. So most of our book of business is in residential mortgages. Most of our financed emissions are in buildings, the large majority. So that's either people's homes or buildings that businesses own. And so we started out by building out a suite of products, thinking that lending was the big issue, and quickly realized that it's way more complicated than that, partly because of the equity issues that face Canada as well, and our areas also. So access to capital, but also just access to advice, access to trustworthy contractors, access to information, trying to navigate. There are a number of government programs, grant programs, but the ability to navigate through some of these incentives can be very difficult, especially for a small business owner that has 20 things on their mind, and climate may not be one of them. So we kind of had to pull back to really start thinking about how do we focus on having advice-rich conversations that talk about climate, but actually come usually from more of an equity perspective or a risk perspective. So talking to a business owner about transition risk or physical risk, more importantly. What that means for them, how to stay competitive, knowing that regulations are changing and disclosure is going to become mandatory at some point, so that they can keep competing for contracts. And then for retail members, same thing. We have some product solutions, but really it starts with a conversation around, hey, how's the weather? How are you feeling? How's your family doing? Are your kids feeling the heat, right? And that's the conversation to start talking about. Have you been thinking about switching out your heating and cooling system to a heat pump, and getting that conversation going? So I hope that answers your question partly.
That does answer the question, and it's very interesting that disconnect of language and the jargon that we use in sustainability people. We did speak in our preparation a little bit about this challenge of language. So I would like to ask Damaris, how can credit unions find that sweet spot on what is necessary to have for the financial institution to manage risk, but at the same time what the community needs? How can we link the long-term financial dollars at the financial institution, but also have that focus on the needs of the community and the members of the credit union?
That's a loaded question. I would like to be able to solve the world problems today, but I don't know if that's going to happen. I think when we look at communities that are disproportionately affected by climate change, a lot of times we look at financial impact, but it is a holistic approach. The first step is really looking at the person as a human. It's not just a money aspect, right? And when we have climate impact and we have these major catastrophes, we look at not just the social impact and economic, but we're also looking at their health impact, right? And somebody that has asthma, they have kids, they can't get food on the table, all of these small day-to-day activities that seem very, very overwhelming. So now when we take in the complexities of climate change and trying to solve for it and all the language that's involved with it and federal government and regulations and acronyms, it's a lot. It's really a lot to understand. So when I'm consulting with credit unions, I always, start with, what is the story you're telling yourself about your community members when it comes to this topic? And then a little bit of fact digging. Let's do a little bit of a needs assessment. Do you know what your community looks like? Do you know what their issues are? So do you know that Mrs. Jenkins down the street, has children that have asthma? So how are we helping her? And if there was a catastrophe and her home was flooded, are you available to be able to provide her a loan, to be able to get, immediate housing? Or can she get credit so she can take her kid to the hospital? All of these things matter in a day-to-day, but really Ms. Jenkins doesn't understand all of these languages. So she may not even speak English. Communities are consistently changing across, especially nowadays, and it looks different than it did 10 years ago. Credit unions are in a very unique position to be those helping hands, and it's a balance of what are we offering, how can we move into the future, and welcome our new members, because we are really tied to the ground. I think there is something to be said for not necessarily advancing as fast as the world does, but at the same time taking the intentionality to slow it. And what I mean by that is really looking at your community. How is it changing? Are you doing these assessments? Are you working with other corporations or even community members? We talked about powerful partnerships previously along these last 2 days, and those are going to be very, very impactful to getting new members in through the door and increasing financial success. Why? Because you're working with the local community members like hospitals, you're working with the local food bank. All of these ties to the community really make sense to someone from a holistic approach. They understand the person who is at the grocery store. So are you partnering with these areas, and are you feeding into that community investment? So if you are a credit union who's in a dry area, right, and you have a very high immigrant population, have you considered investing in community gardens? Right, so the travel doesn't have to be. You'd be surprised at how many people in their own communities love their communities and want to donate and give back to their communities. It's very simple if we can just simplify it for them. It doesn't have to be so overwhelming of this, and that. It's a tiered approach over time if we take a little bit more from ourselves to give back. Are you working with the local high schools? Okay, maybe offer an internship. And that in there is long-term gain. I know I was a credit union member. My mom was one because she was an immigrant, and I stayed with the credit union because my mom stayed with the credit union, and I live in a completely different part of the country, and yet I still bank with the same credit union. So all of these things matter to those in the underrepresented that may not understand climate change because they're concerned to get their kid into a good education system. They're concerned to get food on the table, and they just want to know, does that translate for you? So making it simple, what are the needs? In some areas, to your point over there, is it flooding? So then that's where your focus should be. One step at a time and one issue at a time.
It's tough. Charlotte, I would like to, if you can give us some insights, how East Coast Credit Union have been an anchor of a community, and how has that social purpose grow through time?
So we have a lot of branches in smaller rural communities within Nova Scotia. And so it's been really listening to them and being very responsive to the members that are there in those smaller communities. And of course, we're growing into the more rural regions as well, but always keeping that focus too on community-led projects. And of course, we have, some larger umbrella projects which are corporately led too, but always coming back to boots on the ground. What is the experience of the people that live there, and what do they need day to day? So we have very long history of a social impact, but always making sure to still be very agile and responsive to the smaller communities.
And just as a follow-up question, now moving into, challenges and opportunities. I feel we've been talking about challenges and opportunities the whole time, though. But so how have you been able to tackle social impact while also integrated environmental aspects? Is there any metrics that you've used? Have you created perhaps projects that are multidimensional?
So we're finding that really looking and seeking out partnerships that have more than one dimension and hit more than one pillar. And I think the environmental pillar is still something that does feel intangible to some people. And so it's finding a social program that has an environmental element to it, that has a governance element to it, and really having sort of a win-win-win situation if we can. And if perhaps they don't have an environmental element, thinking of how we could incorporate something like that as well, and sitting down with that partner. So we find that works really well. We found a couple of those programs already, and they're working well, but also just seeking out more of that.
So much. And speaking of a little bit of not only at a level of a community, there's also the option of insurance. So moving into that topic back, Badeel, I was wondering, so insurance plays a vital role in risk mitigation. What are the latest developments of the insurance industry related to climate risk, and are insurers rethinking their models given these extreme events that we just spoke about?
The answer is a resounding yes. I'll explain this with the live example from last week. So I was in Mexico City. One of our clients had me over for their annual board meeting. It's one of the largest reinsurers in Latin America. And so I had a 45-minute session with the board and the CEO that was focused around the topic of sustainability. We ended up talking for 2.5 hours. And at the 2.5 hour mark, lunch was waiting for us, so we had to almost, say, all right, can we put a pause? But where I go with that anecdotal example, where I give a more broader example is that, just like credit unions have a very community and a regional focus risk, insurance, the whole business is risk, right? If you're going to have, we were talking in financial terms, the amount of expected losses that we were expecting every year in America after a climate event were around 30 billion right now. Those numbers are around 100 billion. So when we look at Milton and Helene and some of the recent events, like we're talking, the losses are in hundreds and hundreds of billions of dollars. So fundamentally, how insurance is being priced, how insurance is available in certain communities and other communities, like we're seeing that, even up here where I live in New Jersey, there are cases of insurers moving out, and we know that in Florida it's very prevalent. So insurance industry in general is, I would say, one of the most advanced in the amount of work we do. So in general, at S&P, when we work with banks and credit unions, we are able to help them really pinpoint from a street by street where the risk is. So the insurance entities are almost 5 steps ahead. The insurers and the reinsurers and for anyone in the room, reinsurers are essentially the ones who insure the insurance company itself. So they're the ones who are essentially offering them a guarantee in case of a default, which helps them with having lower capital adequacy, etc. But even they're all, I would say they're almost like ahead of even where we are with our solutions, because they're using real-time climate science models and seeing what are scenarios of what is the path of a certain hurricane if it changes to Category 5, and if it goes 10 miles west or east, what kind of impact it would have, and all of that is getting priced into their policy. Now, bringing it back to the community lens, what that ends up meaning for individuals and John Smith living down the street, the insurance premium is the actuary would have priced that premium very differently, and it's going to get much harder. The premiums are going to rise, and I think unfortunately there's a lot of impact that is going to disproportionately impact the community. So I think a part that I have seen certain credit unions play, bringing it back from insurance to credit unions, how they're helping their community is when they are studying the impact of the communities that they operate in locally, regardless of which geography you operate in. And as part of your community engagement, as part of your community effort, you are informing your members about those changes. I think it is a great community service. It will again create affiliation, sense of community membership with your credit union, with your credit union members. But it also giving them the education and tools. Again, I understand some of this is the job of the government. It doesn't always work that way. So credit unions I think play an integral part by informing them of actions they can take, particularly based on the climate risks that are specifically prevalent in that zip code and location. And I know the Canadian zip codes are even a lot smaller than I think the U.S. zip code. So it's a lot easier to even pinpoint by zip code, where the risk is, and help also educating them about adaptation measures. Like, if you're in this area, it might be better to have some extra flooding protection or having wildfire protection. So and having green products around that would be I think is a great service. And then last but not the least, I think sustainability is good business. As we look at the millennials and Gen Zs and newer generations, they more and more want to associate with financial institutions that think about communities and green lending. So there's a circular benefit of, thinking this way. So starting from insurance, ending at credit union, but I figured I'll give you a detailed answer. Thank you.
Thank you, Badeel. And speaking about communities, and Damaris and Charlotte mentioned a lot of the work that needs to be done at the community level. Andrea, I was wondering if you can share some of the work of with indigenous communities. What's been the impact in bringing services like financial inclusion programs, and pretty much, I guess that there's a bit of that relationship what Badeel was saying of like how the insurance companies have had a great work at the superior level, but then how does that really percolates into the effects of the people in the community. So I guess I think I kind of ramble a bit, but pretty much how indigenous communities really, how are they affected by this? And then also, I know there's been a lot of work with indigenous communities in Vancity, so I'm just curious, does that translate?
Yeah, it absolutely translates, Sofia. I mean, indigenous communities are historically underserved, continue to be underserved, both from financial services, but also there's a number of nations in British Columbia that still don't have clean drinking water. Like, we are talking really underserved. And what's interesting is that I'm speaking of underserved at the community level, at the individual level, and yet the nations, many of them are coming into these large settlements, and so suddenly there's big bank presence building out massive indigenous banking teams coming to meet the needs of the First Nations because they're following the money. What's happening in the wake of this, though, is probably an even bigger disconnect in terms of having some of that local community presence that we've all been talking about. They're happy to service the nation, happy to take those big deposits, make those big loans on the infrastructure projects, but not happy to build a branch in their communities. And many of these communities are rural. They're very hard to get to. So it's definitely an issue. We are, we're not experts in this space by any means, but we have tried a couple of experiments that I'll just, not experiments, but a couple of pilots, I would say, that I'll just share quickly. One is we did, when a financial institution left a remote community on an island, we came in and set up a branch in partnership with the nation and the village. It's in Alert Bay. And it was an interesting partnership because we said, hey, for this to work, we really need your business. And so we built it right into the contract that we would get a certain level of business to make sure we were able to break even. And I'm happy to say we've done slightly better than break even. But it's, it's not a really profitable segment. And so we're lucky that we have this, engine of the bigger credit union behind this work. Second piece, just really quickly, because I know a lot of us are also engaged in financial literacy. Kudos to a brave Indigenous employee who said, Vancity invests a lot in financial literacy. We built out a program. It's scaled across the country, all the way to the East Coast. Each one teach one. They said, I love that. And Indigenous communities, Indigenous people need financial literacy, especially as they're coming into some of these payments. But your definitions of wealth and how you think about money don't resonate with us. And so we revamped our program. We brought in Indigenous elders to decolonize our financial literacy curriculum. And we're working to make that kind of open source because that was a big eye-opener. Thank you.
Thank you. And I know I would like to give some time for questions. So before that, I'm going to do a quick lightning round. So if we can start with you, Cathie. If you could implement one groundbreaking initiative to improve both climate resilience and social impact in the financial sector, what would it be?
Well, I will say you've heard a bit about the work that we're doing in the Clean Communities Investment Accelerator, and I think that's going to be our focus for the next 6 years. But really, it's about building the capacity of community-based lenders to be delivering the right solutions that are appropriate to the households, that address the needs of the households, the household budget, in the language and in the way in which it makes sense, that will also be advancing and reducing carbon emissions goals, and making sure that as we're transitioning our economy, we're doing so in an equitable way. But based on something Badeel said before about the highly local nature of credit unions and that being a risk, I did want to make a plug. A lot of what we're building, and Tucker talked about it a little bit this morning with self-help's model, but Inclusiv runs a secondary market for mortgages. We're running a loan participation program for clean energy loans, and part of that goal is to be able to enable credit unions to be originating loans, holding part of it, and off-selling it so that then they can buy other packages of loans similar and standardized, but coming from other regions. So we are working on that.
Great. And I want to jump to Charlotte because I feel like she needs to speak a little bit more.
Sure, thank you. This is certainly not groundbreaking, but I think what we're trying to move towards is more longer-term partnerships. So, 5 years and over. And so whatever that might be, just kind of going back to a longer-term focus so that anyone that we are partnering with can rely on those funds and just feel that they can really accomplish their goals in a longer amount of time. So certainly, yes, not fancy and groundbreaking, but just making longer-term commitments is a big focus for us.
Damaris?
Okay, I had to write this one down because you were asking if we could do one thing, and I had to figure out what that would be. So I decided to boil the ocean in one thing. And that's really looking at a comprehensive investment program that targets multifunctional areas with one initiative, right? And so I'm going to read off my notes, so don't judge me here. Targeted funding, community engagement, partnerships, capacity building, equitable resource distribution, along with monitoring and reporting, and education and advocacy. So all of those things sort of wrapped up with the support of, the credit unions really do put the pressure on our local governments when they have the responsibility to put the pressure on their vendors, their QSOs, to really do more for them and provide some of these products and services that really cater to their audiences and their members. And they have the power to do that and make those changes.
I would say. Badeel?
Yeah, this might be a little bit of a controversial opinion depending on how you feel, but I think the one thing that on my wish list would be, and I think that's going to have great impact, is better regulation. Whether it's coming from NCUA or is it the SEC bill, they're all interrelated. I think that in my opinion, while regulation is not the solution, the stick is not always, the carrot is better than the stick. But I think we've seen some very positive effects of regulation in Europe, in the North and Canada. So I think that'll be my one wish list item.
I would definitely agree with you. I'm all for regulation on that. Andrea, go ahead.
Thank you. I've spent 3 days here now, and I say I'm coming away from this summit with a lot of envy around Inclusiv, around CDFI, around the Inflation Reduction Fund. And, if there was one thing, I wish we could add some of that in Canada. In the absence of that, though, I would say I wish that the credit unions would cooperate more effectively to lobby for and to build out more interesting finance tools that really pushed action that merged climate and equity together. I think we could take a page from you folks here.
Thank you. Yeah. Great. So this is a great segue to a question for Andrea and Charlotte. Are there different implications for Canadian credit unions engaged in community financing than those in the U.S.?
Sure, yeah, because that kind of ties into my envy for CDFIs. We do not have CDFIs in Canada, so everything that you see, Vancity, Charlotte's credit union, the credit unions previous, that's all voluntary. There's no granting, there's no special treatment, there's no incentives. So that's a huge, huge difference.
Charlotte.
Yeah, unfortunately, I guess I'm not as familiar with the U.S. Regulations, but yes, I would definitely say that we need to do more collaboration together. We're fairly good at doing that in the Atlantic provinces, but definitely just spread it out around Canada as well.
And I would like to just mention that everybody mentioned partnerships, like in one way or another. And another topic that really resonated was like that jargon complication. So the jargon that we tend to use, I think, in sustainability teams is not the same that people at the community actually use. Is there any question?
I have another one that I didn't pass to you because it's a little complex to wrangle into the form of a question. I'm gonna put it out there, and it's for anybody. If you have thoughts about this, if you're a worldo as I am and interested in foreign policy, or someone in our virtual attendance is certainly interested in this. They say that BRICS, which is a bloc made up of Brazil, Russia, India, China, and South Africa, has been meeting this week. Does anyone on the panel have thoughts or comments on the impact of climate on this bloc, and my addition, the implication of these jurisdictions making policy on a separate track from other jurisdictions in the world, and what that might mean for our movement as it applies globally to these things that are planetary issues? So you joke about saving the world and fixing it all at once, and then that's what happens.
I'll take a small stab at it. Just thinking about those regions and having, looked at some of our just climate studies. And I personally, by the way, grew up in Pakistan for most of my life. That is right adjacent to India, which is part of BRICS. And, some of these regions are, and again, this is just more of a comment. I don't know. It's not really a golden solution. Or any golden herring, but these areas, most of these regions are extremely prone and they have significant challenges. So when I think about, for example, India and Pakistan in particular, we're talking about a very highly overpopulated area that is, per our climate models, is going to have extreme temperatures in the next 20, 30 years, and we'll have water scarcity as well as resource scarcity. And on top, not to add on top of that, between those two countries, they have 300 nuclear warheads. So it's a recipe for, again, I think there is more of like a global role to be played. And while they're not the biggest emitters themselves in terms of emissions, again, U.S. and Canada, not Canada, shouldn't include, but the U.S. is one of the largest emitters of greenhouse gases. China is definitely up there. But there's a circular impact. And then obviously Brazil has its own challenges with Amazon deforestation. Nature is another topic that I know UN's very involved in. We provide a lot of detailed insights around deforestation, biodiverse areas, and all of that. So I think where I'm going with this is that while BRICS is coming up with their own, obviously I understand there's a separate coalition, but at the end of the day, it's one world, and it's one and some of the work that is done here and some of the impact that U.S. has and other, in this hemisphere in Europe, these entities have an impact. So I think we should just, again, way above my pay grade or my ability, but there still needs to be, while there are going to be local coalitions and regional coalitions, there needs to be more global interaction, because otherwise we'll have challenges.
We don't want policy at cross purposes, right? And particularly South Africa and really India too, every country that's in the global South really needs a seat at the table as we're working these things out. I see Cathie's got some thoughts.
I was just going to say, I think we have a great topic for next year's United in Sustainability, because it's going to be the International Year of the Cooperative, and having some greater international conversation would be wonderful on that.
I was just going to contribute to that same conversation while I have my own personal opinion. It eventually comes down, what you're seeing with BRICS is really what's happening on a macro level that's really happening on micro level. Eventually, it'll all kind of come into a head in terms of there's going to be a point in time where it's going to collide, and everyone is going to have a seat at the table. But it is an in-depth conversation that we do need to begin having in terms of a lot of these conversations that are highly politicized are really happening in different parts of the world, really tackling the same conversation. So we're duplicating work essentially in different ways and in different languages. So eventually these conversations are going to start to get smaller and smaller, and the people that are going to be represented are going to get smaller and smaller. I wish we could get there sooner than later. But again, politics a lot of times gets in the way. So again, part of the credit union movement is really what are we helping our community understand, advocate, and bring awareness to, that it is not just a weather issue when we look at climate change. It is really something that's politicized in a way to drive fear, to get people away from what the actual happenings that's happening in their community that impact them. So we're going to save that, I think, for next year. But I think it's a good, whoever put that in the comments, thank you for planting the seed, because that jargon, when we look at BRICS, is another complication in the discussion on how really we need to make very substantial changes in order for us to be successful in 100 years from now.
Thank you so much. And with that, is there any other question?
A long question, comment, link to read more has come into the chat. I'm guessing this is someone who either loves Canadian culture or is writing to us from Canada. I'm just going to read it to you. Because the question came up in a previous segment and we didn't have time for it then. I understand that 1/3 of 2023 home sales in Canada were paid with cash. According to a recent CBC report, $1 trillion is expected to be transitioning from the baby boomer to the millennial generation. With the pace of climate change, the pressure of refugees globally, BRICS, etc., this very community and collaborative investment work is just that much more important, timely, and vital, eh? International Polar Year 2032-2033 is coming up quickly. Again, thank you each and all for all you do. So I guess particularly to the Canadians, does that spur any thoughts or comments in you?
Yeah, I guess I'll just say that one of our advantages of being a credit union is that cooperative spirit. And I think
we come to that naturally. So just really kind of amplifying that and cooperating with cooperatives is what we like to do.
Well, thank you, everyone. I hope you enjoyed the panel. I certainly am in love with our esteemed panelists, and I would ask. Okay, please clap here.